It's August, and we have a real estate market update for you here in Austin, Texas. The number of sales still down. What's going on with prices? Are they down? Are they up? So we will get into that here as we walk through the statistics. I'm David Shapiro with my colleague Lee Abraham with the Shapiro Group here in Austin. So let's dive right in. The number of active listings, we saw a big jump a couple months ago, and you can see we're sitting steady right here around 3,300 active listings in the city of Austin. And that pushes the monthly housing inventory up to about 5 months. Lee, anything in detail you want to talk about here?
Well, I think the main thing is that when you look at the 30-day pending sales, that they're pretty much in alignment with the closed sales from the past month and the 12-month average. So this kind of feels like the new normal. But as we get into some of the underlying statistics, there's a little bit of risk that we may continue to soften, and we'll get into, like I said, the underlying details as we go forward. Right now, kind of stable, but glacial speed towards a balanced market.
Yeah, here you can see that monthly housing inventory over time. This 5 months of inventory is usually where we were settling in the winter. You can see that was December here. We were right around five. So hitting that a little bit earlier than we would anticipate. So very curious to see how this tracks as time progresses here.
Yeah, and when we look at that monthly housing inventory, it's the combination of the number of active listings and the number of sales. It's what we covered on the first slide. And this is really the driver right here, David. Number of sales just anemic at under 700 a month. This is really the key to how the market performs for the rest of the year. Is it going to tick up? If not, we're going to be hovering closer to 6-month housing inventory, I do believe. But remains to be seen how the sales are going to be behaving over the next few weeks, couple months.
And going back to, about 1,200 a month is what we should be seeing in the summer here in Austin. And so we're down about 45%. So still 55% of sales are happening, but it feels like so much less. It's such a big chunk of the sales that have kind of gone away for now. But we'll see. We got potential interest rate drop coming up this year and an election to get passed, and pretty confident once we get through all that, it'll feel a lot different. And here we go, the price. So the price is down month over month, but it's actually up year over year. It was not last month. Last month it was still down year over year. So this is just normal seasonality where the pricing changes throughout the year. So you can see that it's consistent every year, it changes. And so we're actually up year over year. So that's interesting to see. So prices remaining stable. I think that's been kind of the story here for how long, Lee? I mean, go back. The peak was here in May of 2022, but maybe even the last year, year and a half, pretty stable on prices. Where some months it's up a couple points from the year over year, some it's down a couple points, but pretty stable on the pricing despite a huge drop in the number of sales.
Yeah, the first quarter of 2022 into the summer was really, the bloodbath months when you're looking at the average sale price as a metric. So right now, stability, if you're up 1.2%, down 1.4%, basically you look at that as a whole and, it's generally stable. So, and that's the fascinating thing about this market. We've talked about it, I know last month a little bit, is that, the supply and demand are just kind of in lockstep with each other for the most part. And so we'll parse that out a little bit, but just kind of a holistically strong market, David. When supply goes up, demand goes up, supply goes down, demand is down. It's just fascinating. Days to sell reflects the softening of the market that we've been talking about. 49 days up year over year, up month to month, the same amount, interestingly. And so still relatively healthy number, under 50 days is a good days on market, and just kind of in alignment with everything else we've seen.
Yeah, interesting. So it's 39 and 39 last month, 43 and 43. We kind of had some weird consistency there. So now we're off. So next month the change percentage will not be the same.
Yeah.
Number of new listings down 10% year over year. And so this is what you were talking about, Lee, where yeah, demand is down, but the number of the supply is also dropping. Probably some sort of like just seller expectation of, hey, okay, the market's slow. I'm not going to get what I want. Like, I'm not even going to bother listing it. So I think that's pretty normal behavior. And then some of those people, they're even listing it, but also simultaneously listing it for lease and just saying, yeah, whichever one I get first. And so a lot of those properties are leasing before they're selling for what the owner wants for the property.
You know, David, one of the things that we haven't really talked about in relation to this statistic is the fact that the city of Austin, which these statistics reflect, is a landlocked geo segment, a landlocked area, not a ton of available land for development. A lot of redevelopment, a lot of infill product that can be created in Austin. But I think that the number of new listings hitting the market is somehow more manageable than in other areas where there's so much development that's planned years in advance, and then product hits the market and it really can skew the supply demand dynamic. What we don't want to see is new listings going up and sales going down. That's where we get into a destabilized market that becomes more of a buyer's market, and that's not good for our equity holding sellers.
Yeah. Interesting little side fact. I was reading an article about Storybuilt, which was a large developer in town that went under. They're in receivership right now, selling off assets. And, that's a significant, I mean, their holdings on the conservative low side is several $100 million worth of real estate. And then they've touted a pipeline in the multi-billions. So that's a lot of inventory that's going to be on the sidelines, not going to be developed right away. It's going to take a long time for that to work through the system for other developers that are big enough. There's only a handful of developers that are probably big enough to do some of those projects to come in and get some of that inventory online. So you drive around town, South First is one area where I think it was about a 40 unit apartment building they were going to build. And it's just sitting concrete with some wood above it, framed out. And it's been in that stage for probably a year now. And so, that's another thing that has happened here with a big developer that has locked up some inventory. So number of things keeping inventory in line. And so it'll be interesting to see what happens when demand really picks up, which we're anticipating next year. And there's just not enough inventory still. And even if the lock-in effect of people keeping their low rate mortgages, right? That's been the main factor. And so a little bit of that will be unlocked as rates come down, but certainly not a big majority of it or anything.
Sale price, list price ratio, notoriously stable, but strangely reliable as an indicator. And it's down just a tad. I think that is reflective of market sentiment right now. Anecdotally, we know that visitors to open houses, for example, down. So it's a softer market, and this is bearing that out even ever so slightly in the margins.
And then our listing inventory barometer. So just to remind you, this 100% line right here is what we're looking at. So any weeks where it was below that, that means there was more sales than new listings. And then the majority of weeks we're seeing here, we had more listings than sales. And if we look over here, we can see that the most recent week, there was 221 new listings, 141 sales. So 157% is the rate. Lee, anything you want to mention on this?
Yeah, I think that, this really does tell the story, at least on the surface. And so what I mean by that is that with the pending sales kind of in a lull here over the past 6 weeks or so, 5 or 6 weeks, 150 down to 141, it's reflective of how fortunate our equity holders are that the supply side has remained relatively limited as well. That's good for a balanced market, stable demand, pricing, and so forth. But David, I'd like to talk a little bit about the shadow inventory. If you go to the next slide, I've prepared a new look at a statistic that we really haven't talked about. For a while there, we were tracking the number of expired listings and they were relatively constant. So we didn't find them to be very useful. But as we get into this new normal, if you will, factoring in the number of listings added or lost, so you can see the column there, I guess it's what, the fifth one from the left, number of listings added or lost. That's simply the math on the numbers we've been showing you every week. So for example, the last week, there were 221 new listings, 141 pending sales. That is 80 listings gained. However, there were 183 listings withdrawn and expired in that week. And so over the past 5 weeks, we've had 3 weeks where the number of expired or withdrawn listings exceeded the number of listings gained, and you have a net actual decrease in the number of listings. So when we talk about equity, supply and demand being in a seller's market or a balanced market, but not really wanting to be in a buyer's market, this is another layer showing how limited the inventory is, and one of the reasons why those numbers of actual listings went down from last month to this month. So just a little peek behind the curtain there, something we don't normally talk about.
Yeah, interesting. And then we have the mortgage rate. So down a little bit here, down to 6.73%. You can see the 52-week range. So we're definitely towards the lower end of the range here. And, interestingly, it doesn't look like it's changed all that much when you look at it, compared to a year ago, down 0.17. But it's been ranging quite a bit here towards the lower end of the range. I think we're anticipating that these might come down a little bit even with a potential Fed interest rate decrease.
David, not to be a killjoy, because that's not how I like to roll, but I'm becoming increasingly skeptical that a Fed funds decrease, if it's not significant, I don't know that it's going to impact the mortgage rates. And in fact, if it's substandard, I can see mortgage rates actually moving inversely. So I think that the current dynamic is very unstable, actually, when we're looking at what's going to happen with interest rates. And so, sure, will the Fed lower the rate? Looks like they will. Will it be enough to impact mortgage rates? That is not guaranteed. I guess that's the takeaway, is that the
Yeah.
probability of mortgage rates going down is less than the probability of the funds rate going down.
I look at it more as just a sentiment indicator that it's just signaling to the public that, okay, rates are going to start coming down, that we've beat this inflation. We're confident in that. So I think that's probably more than anything. And it starts to let buyers feel more comfortable coming out and being like, oh, okay, I can start looking now. What is interesting, is does the average buyer wait for a 0.5% decrease in mortgage rates, 1%? Like, where does a buyer start coming out? Because if you're hearing, oh, rates are going to come down, and you're looking at 6.5, and you're like, well, maybe at 5.5, I'll start looking, right? So I think it's where is that waterfall, that cusp where people actually get out and start looking in big numbers. The smart buyers are going to get out now and try to make a deal before rates start to come down, and then just refi. So if you're thinking about buying next year, I would say don't jump in when everybody else is jumping in. Do it now. And as we're showing you, there's very few people looking. Inventory is now at a several year high. I mean, this might be, in terms of months of inventory, at 5. That might be the highest we've seen it since 2012 or something like that, would be my guess. So we're talking about a 12-year high in the amount of inventory. So hasn't been a better time necessarily to look for homes than right now. So don't wait on the sidelines till everybody else is jumping in, is my message to you. Well, that does it for the city. Now let's talk about the suburbs. So we'd like to break it down, not just the whole metro with the city combined, so I think it skews the numbers. So we looked at the city. Now we're going to look at everything surrounding it. And here we've got, roughly the same, just under 5 months of inventory. Of course, this is a larger area, so there's more active listings, more sales.
So the number of sales per month down just a little bit, month to month, year over year. again, just kind of consistent with what we've seen in town in terms of the actual number of sales per month.
And the average sales price up month over month, but actually it's down year over year. And we've really seen that the average sale price in the suburbs struggling in comparison to within the city, which has been holding up better. But it's really not bad at all. Only down 2.7%. That's, I would say, in our stability range.
And again, David, this is the average sale price, which is a market indicator. So for our homeowners out there that are thinking of selling, this doesn't mean that your house is definitely worth 2.7% less than it was last year. That's not really what's going on here. So if you have questions about the current value of your home, what would it sell for? That's where you give us a call, because these market indicators are exactly that. They're not necessarily reflective.
Contact info is down in the YouTube description, so you can reach out to us however you'd like. And we would love chatting with you and seeing if we can talk to you more about your goals and if it's just help you determine if it's the right time to sell or not. Days on market, about flat here. So not much really to tell here.
And the number of new listings, yes, up a little bit year over year, down month to month. Again, what we don't want to see here is a huge increase of new listings when sales are few and far between. That's not a good formula for pricing for homeowners. And so, balanced market. Let's see what we get next month and what kind of pattern it forms.
And then the sales price, list price ratio, kind of similar to in town, just down slightly year over year, although flat month to month.
And I've got to point out, David, that I do believe this is the first time in the few years that we've been doing this now where we actually were able to use the zero change logo twice in a report. Normally it's just on one metric, but here we got it.
Days on market, sales price, list price ratio. So, well, I think, not too much has changed from a month ago doing this report, but I think a lot could change here in the coming months. So very curious to see what happens with the market. Anecdotally, I think we're seeing some buyers really take advantage of this and get some good deals and some really amazing properties that, frankly, one buyer just surprised he was able to get such an amazing property. It actually ended up going to multiple offers, which we were surprised, but we ended up winning it, and very exciting for him. And then on the listing side, having some success there, if sellers are willing to listen to our guidance, figure out what the right price is for the home, and able to get properties sold. So there's still activity. Remember, 55% of deals are still happening. So it's not like it's zero deals are happening, right? So there is still an opportunity if you have to sell. I would say for most sellers, if you have an opportunity to wait, probably better to wait. And if you're a buyer, better not to wait. So that's my advice. Lee, anything you want to add?
No, I think you're spot on. However, I will say this, David, and it's in alignment with the Shapiro theory of real estate, which is homeowners that have a really nice premium property, doesn't have any flaws or adverse conditions, just nice, and you're thinking of selling, get it on the market, because there are not a lot of homes for sale. A lot of the homes that are lingering have issues, may have adverse conditions, may not be priced properly. And we are finding that the premium product is selling, David, and not only selling quickly, but in some cases at a premium, because buyers know that when the market heats up, that property will be gone.
Mm-hmm. Yeah, for sure. Well, thank you for joining us. If you got a lot out of this, subscribe to the channel so you can get updated for next month's video. Send it to a friend. Reach out to us if you have questions about your property or specific neighborhoods. Remember, real estate is hyper local, so we don't have enough to dig into every single neighborhood on this call, but we're happy to do that one-on-one with you. So go ahead and reach out. And thank you for joining us.
Thanks, everybody.